Aloha, everyone. Obviously, we had another quiet overall session on Tuesday as we are in the middle of a holiday week. The NASDAQ pulled back 0.61%. Volume was actually higher than the day before, giving this a technical distribution day. And once again, not surprising considering the little tightrope higher walk act we are trying to accomplish here. Like I said, historically, these things do not end well, so I do not expect us to just keep on slightly trending higher. But we can keep on doing that because the market's going to do whatever in the hell the market wants to do. You're foolish, and I'm foolish for thinking that we can know what's going to happen in the future. That's why all these 2015 predictions are absolutely hilarious to me, just like they are every year. But it's astounding how many small traders that have no experience in the stock market think they know what's going to happen next year. It's pretty insane to me, but whatever. I'm used to it. So overall, NASDAQ, as we look here, the TSV is starting to trend down again. MACD, while we were having, it looked like a short-term turn higher, it is now leveling out a bit, so it's not as bullish as it looks, but we still have a hook higher. The S&P 500, similar situation. We have a hook higher off the below zero levels in the MACD, but TSV is also rolling over again, indicating that it might not want to exactly just be a smooth ride higher. I would love to see us pull back to the 50-day moving average, find support there, then rally higher, but I don't get what I want normally. Russell 2000, same thing. Hard to see the TSV, but the TSV line right here is starting to roll over a little bit today. Still overall in an uptrend. MACD looks good. The good news is that this index is the best looking index out of all of them. Now going to a zoom to and looking at stochastics, you can see, hey, it's racing back up to that overbought condition. So even if we do go higher, we're going to start seeing overbought pressure on this market very, very shortly. S&P 500, similar situation. NASDAQ, similar situation. Not there yet, but they're racing there quite fast without the indexes putting in much upside progress. So that's indicative to me that we might be tired here. And that's why, while I don't have a lot of sells tonight, I do have a lot of stocks that I want to put on watch to make sure my sell stops are good. There's about 3, 6, 9, 12, about 15 longs that I'm going to work sell stops in higher on as they were down today. Remember, any down stock on any day as we get on late into this low volume rally, I'm going to move up stops. I don't want to see my gains disappear. Now, there are two stocks that are sells. SUPN actually triggered a full sell yesterday whenever it moved below 826, so I'm all out at 825. It closed at 835 yesterday, canceling the end of day sell signal, so I didn't bring it up to anyone, but I'm completely out already. But today it actually failed. So it failed the 825 lows back here in November, and because it failed those lows, we are out of this long-term position. Remember, if it just retakes the 50 200-day moving average, I'm back long SUPN. This is the first passing stock for my long-term portfolio holdings. The one thing, though, that will prevent it from being a long-term holding is if it's moving lower. As long as it's trending above the 200-day moving average, I'll let it do whatever it wants. But with it trending below the 200-day moving average, not interested in holding it. If this thing goes to $5, I don't want to be a part of that. Just like SAFM. SAFM officially passed back here in December. It was up a little bit by the time it passed. I thought I missed the big move and was going to regret that badly. However, as we go along, looks like we're okay. So whenever SAFM retakes that 200-day moving average on strong volume, it will become a long-term portfolio holding. But besides that, we just don't, have anything showing up that I want to buy long-term, especially here right now with the low-volume market. But SUPN is a full sell. And then PCRX hit 33% of my sell stops today. I moved one up to just below this day's low, and obviously it took it out, so I'm already out of that one. My next cut loss level was below this day's low a day, I believe. Yep. So right here around the 89.06 level is where my next cut loss was. And then I had a final one back here on this November date. However, I'm now eliminating that one around the 88 level. No, I was going to do it back here, actually. That's right. So I had it all the way back here. So what I might do, actually, is, since I sold 33%, I got to sell more off because it's a 50% sell today. So this move here is a 50% sell as it's closing below the low a day of the signal date, but holding above the low a day of the actual real signal date if we combine these 2 days. I'm looking at that as the signal date, the 2 days combined. But with it closing below the low day of the first one, that's a 50% sell. Now, what I'm going to probably do is either lay the rest half of the position with the final sell stop at 89.05, or I'm going to split that in half at 89.05 and then put the other half right here at 88.47 to maybe see if it doesn't want to do one of these intraday reversals that it likes to do. But for now, PCRX is a 50% sell, and that is it. There are no real long positions. LOCK, we did not get filled yesterday, so LOCK, it moved without me. It was extended after, by the time it closed yesterday, 1823, that's extended. So opening at 1860, I'm not interested in it, or chasing the even down to 1840. It had to hit 1823. Did not. So if LOCK runs without me, like I said, I'll be fine with it. But as it is, it's only building up to the right side. The right side's milling up to its left side of this big, giant cup pattern that it's forming with the February high. So it might still handle. And if it handles with this kind of strong green bop on low volume and then breaks out again, yeah, we'll put whatever we have left into lock. But as it is, FMD was our new speculative long signal. It worked yesterday, and I got two more today. First one, let's go over X and CR. Pocket pivot point, biotech signal. We do not risk much at all if we are wrong. So this is definitely a signal I have to take. And then SKYS is a bit more risky, but this is an extremely bullish chart pattern. This is a Hong Kong stock. And the biggest thing I like about it, which is hard to see on a Zoom 4, but watch what I do whenever I press my not my spacebar button, my column, parenthesis, bracket, whatever the hell you want to call it. It's a bracket button. Big surge in BOP all the way to max green. Huge surge in volume. Biggest volume it's seen its entire, life of being a stock. And it's breaking out above the closing highs here on this date, 12/22, and it's closing above the highs of 12/26. That is a long signal. Where the final cut losses are going to be is going to be very clear. 1155 is the first level where it's going to need to fail, where I don't want it to fail. Then there's 1128. Then there's 1107. If you want to do it in halves, I would do 1155, 1107. So that's my recommendation to have as stops. 1155, 1107. This stock should not pull back. It should rocket higher. Look at that huge surge on huge volume after a no volume pullback. More light volume sideways trade. Then whenever it starts to move up again, big volume. And BOP grew from the first up day following the big surge. And the second day we got max green BOP. So SKYS, only 1%, very speculative. And XNCR, 1%, just like FMD was 1%. So that is our only long position, speculative, nothing of any quality. I didn't even flag anything. And KEG is the only other stock I flagged, and that's off the lows doing a pocket pivot point signal. See you on Wednesday, everyone. Thank you.